I think you could argue the percentage gains will be better than ever, but it's because we're coming from the depths of the bottom.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today for our weekly chat is our president, Andy Schectman. Andy, thank you so much for joining us today.
Elijah, sorry today had to be audio. We're having some technical difficulties on this end, but it's always good to be back, and thanks for having me.
It's all good. It's all good. It's like the old days when I just did audio. It's great. Now, first, I'd love to talk about the GDP numbers because we had a historic rise in GDP. I'm not sure what it actually means. Is kind of like just turning back on the economy because we shut it down. But the third quarter GDP was 33%, more than 33%. The stock market went up a bit yesterday, but now it's lost all those gains and even down further now. What do you think is going on?
I think the numbers will look better than ever. I think you could argue the percentage gains will be better than ever, but it's because we're coming from the depths of the bottom. When 50 million people were laid off and the economy was shut down, and some of these corporations started hiring some people back, the numbers will look great. They're skewed. They're coming from the depths of hell, and now moving up, you'll see numbers that look really good, but arguably are not. It's skewed, and we still have, record unemployment with 30, 40 million people unemployed. Unemployment claims are still massive, but when you're coming from a place that we've never seen before, or rarely, if ever, since the Great Depression, of course the numbers will look good, but I think they're coming back from a spot that makes them look good, not in reflection or relation to where we've been over the last several years.
Yeah, what about the precious metal markets? Because we've been seeing this week precious metals fall amid this recent news about the economy. What do you think is going on?
I think it's interesting that the stock market and gold have been somewhat tied together in their movement lately. It's unusual. Maybe it's an algorithm run by the banks that don't want people running to precious metals to delink the rationale between a falling market and precious metals. Ultimately, it will separate. As Ibbotson pointed out, IBBOTSON, a company out of Chicago that was recently bought by Morningstar, that there are no inversely related asset classes to the U.S. stock market anymore, with the exception of precious metals. Bonds and stocks used to be inversely related. They're not anymore because of manipulated interest rates. They are positively correlated. The only inversely correlated asset to the U.S. stock market over time will be precious metals. So it's noise. It doesn't really matter. I know people like to see the daily movements. It's frustrating. I get it. But ultimately, they will separate from one another as the market moves in a different direction. I do believe that to be true.
And what kind of demand are we seeing amid this fall in price?
Really strong demand. Weaker demand when the price goes up, much stronger demand when the price goes down, in large part to people like you, Elijah, because people who are buying the metal have been awoken to the fact that the media, our mainstream media, is not doing us any favors. They're not telling us anything that we need to know. You have to seek alternative media sources in order to see the truth. And the truth is easily seen when you understand that the price is being pushed down and not reflective of fundamentals. It's a subsidy. So demand increases when the price drops, by and large.
Now, with respect to that, can you, elaborate for our viewers? Because I know we've seen JPMorgan and other banks, I think there's been at least 4 now, that have been accused of spoofing the price, but spoofing by itself can be up or down, right? So what makes people say that there's actually a suppression of the price?
Well, I think that what they were charged with and what they were actually doing is few and far between. I think that what they were charged with makes it very hard for companies to sue JPMorgan to do class action lawsuits because spoofing by its very nature is very difficult to identify and to point towards specific losses. I think that was kind of an acquiescence by the government. But if it were flat out manipulation charges, there would be massive cash class action lawsuits against the commercial banks, enough to put them out of business. And so I think it's very obvious. If you look at, there's a man named Dimitri Speck who has published a great series of charts, and I can send that to you, Elijah. You can put that up on the screen, hopefully, where he has shown that over a 10-year period, you look at the AM fix in London, the PM fix in London, and New York trading, that markets cascade downward in those three time slots: AM fix, PM fix, and the opening of the New York market, which kind of coincides with the London PM fix. But these manipulations, when you look at it on a chart, they go straight down. There is no question that the commercial banks have been manipulating the price of gold, and I am somewhat disappointed that they were only charged with spoofing. I think it's far deeper than that. They have been outright manipulating the price and accumulating physical metal, a la JPMorgan, with their 700 million ounces of physical silver and 25 million ounces of gold that they have accumulated at subsidized prices. So you watch the market long enough, it's hard to ignore the fact that free markets don't move the way that this market does.
Now, we asked viewers to submit some questions, and we got quite a bit of turnout here. So we're going to try to get as many as we can in here. The first viewer, Frank, is wanting to know about Canada and their gold holdings. It's been reported, how Canada has pretty much sold all their gold holdings. What is your perspective on this?
Can't quite understand why the heck they would do that. They are a resource-rich country. They have lots of gold mines. But here again, you have these politicians who make moves that are counterintuitive and not always in the best interest of their public. It's a head scratcher, to be honest with you, why they would, especially now. It's just as big of a head scratcher as why the Bank of England would, under Gordon Brown, would sell their gold when it was $252 an ounce, a third or a half of all the gold that Bank of England possessed. So I don't know why they would have divested of gold. Maybe when they did it over the last several years, gold was out of favor, and the politicians thought that they could get something better that would return interest, that wasn't speculative, that didn't cost money to store, that paid some interest, like treasuries or what have you. But it's a head scratcher, Elijah. It makes no sense.
It's interesting because I know last week we talked about how there are so many signals in your perspective that show that really the world might be moving back towards some sort of gold-based monetary system, but it doesn't seem like Canada has that perspective.
I think they may have that perspective. They made this move a few years ago. It's not like they've been recently divesting of gold. They haven't had any for several years. So again, it makes no sense, especially when you look at gold being reclassified as a tier 1 asset. You would think that they're very regretful of that decision, no question about it. I think that it will go down as one of the worst decisions that they have ever made. And, maybe you'll see them nationalize some of the mines in Canada. I don't know. Maybe they will, maybe they won't. I think that it was a poor decision. It was poor timing. But you got to remember, we came out of a 7 year protracted bear market where those types of decisions would not have been met with unpopularity.
Shays is wanting to know about your perspective on holding precious metals outside of the United States to kind of diversify and consider geopolitical risks as well.
Yeah, well, ironically, I choose Canada to store it there. I think it is, in a world of imperfect choices. I know we just talked about Canada, but storing at Brinks in our Canadian facilities with Brinks has proven for me to be the best choice. So let's look at Canada for a minute. Yes, they sold their gold. Their banks were voted the strongest in the world several years running, surpassing Switzerland. They're bordered by 3 oceans. They don't aggravate anybody. They're resource rich. In a world of imperfect choices, to me, it's the choice. I watched Switzerland kick out all of the American depositors with UBS and Credit Suisse, kick out all the gold depositors with Viamet, all because of the Form 8938 FACTA. I don't think keeping your money in Singapore, to me, is the place to do it. Yeah, it's somewhat gold friendly right now, but there's a lot of trouble in the South China Sea, and getting your money from 6,000 miles away when you need it's not easy. Furthermore, I had a client recently try to ship back from the duty-free zone at Brinks in Singapore 15, 20,000 ounces of silver, and the cost was extraordinary. He didn't even ship it back yet. It's so expensive. So getting it back is not easy. Sending it back is costly. In a world of imperfect choices, I choose Canada. And the fact that they sold their gold to me is somewhat irrelevant. I guess in the back of my mind, I understand it. But just because they don't own gold as a country doesn't mean it's not a friendly place to store assets.
JD is wanting to know, when investing in gold and silver, what is your perspective on the ratio that people should be investing in?
Well, it's interesting. Our interview the other day with Keith Newmeyer underscored that. Keith told both you and I that what's coming out of the ground is 8-1. So if you're seeing it right now, roughly 80-1, and it's coming out of ground at 8-1, what other investment class gives you realistically a 10-1 return on ratio? In other words, anytime you're above 70, you should be in silver. Anytime you're below 40-ish, you should be in gold. Well, we're almost at 80, which in and of itself is an anomaly. If people traded gold right now at roughly 80-1 into silver, and Keith is right, I asked him, do you think we'll see 8-1? He said, yeah, I do someday, because that's reflective of what it really is to pull it out of the ground. Well, if that be the case, then yes, indeed. You could swap back into gold at 8-1 if we saw that, and make 10 times the gold you started with. Is that realistic? Maybe. The average over the last 100 years or so has been in the 40s-1. So even if it went to 40-1, you trade back into gold then and double what you started with. So the ratio is in favor of silver right now. In fact, it's screaming so.
Now, I believe you've addressed this in previous interviews, but if you'd like to just quick reiterate for our viewer Larry, who's wanting to know, why would you choose certain numismatic ounces of gold versus just the normal bullion coins? And maybe you can also talk about maybe the difference between the numismatic and semi-numismatic as well.
Well, numismatic coins would be really rare coins that the value is based almost entirely upon its scarcity or its age. Semi-numismatics to me are the coins to buy if you're going to, because the difference in price is somewhat minimalistic in comparison to gold bullion. They are pieces of Americana, U.S. pre-1933 coins. They are technically safe from confiscation, or theoretically. They offer better upside potential, and they're just neater to look at. This was pocket change, or $20 worth of money. Shouldn't really call it pocket change, I guess, because it was a lot more than that back then. But this was money that people used prior to 1933. And if you can buy a $20 gold piece for anywhere near the same price as gold bullion, it totally behooves you for those reasons: upside potential, safety from confiscation, no dealer reporting, and it's just a neater piece of history. So I like them a lot. The real numismatics are only reserved for people who know what the heck they're doing, who have enough money to buy it, and it's a cherry on top of a sundae. The sundae should be the vanilla ice cream, the base of it anyway, should be gold bullion and semi-numismatics, and then you can think about buying some rare numismatics.
All right, well, to end with just kind of a fun question, two viewers are wanting to know, also, so Dave is wanting to know, tell us more about your guitar collection, and Larry is wanting to know, what types of music does Andy like to play on guitar?
Well, I wish I was a good guitar player. My son is a really good guitar player. I used to be, a million years ago in the early 90s, when I was a young man, I helped a friend of mine who started a memorabilia company. I worked with him, and I got to acquire a lot of memorabilia. I love music. I love the Grateful Dead. The first concert I ever saw was the Rolling Stones. I'm a classic rock and roll guy, and all of those guitars were signed by classic rock and roll artists and some blues artists. So my son, he's good enough to be in a band. Me, I might be able to strum a few chords, but I'm not a guitar player whatsoever. I just like collecting neat things and trinkets of artifacts that I find interesting. So I like the way they look. I like to listen to the music that these artists play, but in general, I'm not much of a guitar player.
All right. Well, Andy Schectman, thank you so much for your time today. If people would like to call us, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Any last thoughts before we let you go?
Elijah, this is a pivotal time. This is the most important election in my lifetime coming up, maybe since Abraham Lincoln. I mean, it's that important. And we are at a pivotal crossroad. And so I'm very hopeful that we are taking the steps to help people protect themselves regardless of who wins. I think if Joe Biden wins, you will see a market turn south as he's raising capital gains taxes very quickly, a market that is detached from Main Street. Even the most ardent stock bulls have to realize that it's detached from reality. And if you knew that and you're sitting on massive gains and you knew your capital gains taxes were going up, wouldn't you sell before January 1? I know I would. And if Trump wins, and I think I'm hoping he does, I think I will sleep in bed with my AR-15 here in Minneapolis, because I think there will be looting and rioting and complaining and contesting. And I think that, I hate to even say that, but I think it'll happen. And I think that this is going to be a crazy month of December for all of us. So buckle up. Keep listening each week. I'll tell you what's going on the boots on the ground, and God bless everyone listening. I think this is a pivotal time for this country. Let's hope we come out of it on the other end looking better than we did going into it.
Definitely. Andy Schectman, thank you so much for your time, and God bless.
Elijah, God bless you too, my friend. I'll look forward to talking with you next week.